Ladies and gentlemen, welcome back to another episode of Investing for the Common Man, the channel where we learn how to save our most valuable resource. No, not our money, but our time with short, concise, instructional videos. At the beginning of July, I revealed my top 5 stock picks for the month, and I sure hope you watched it because every single stock I named in that video absolutely crushed the S&P 500 this month and all of the other major indices. If that weren't enough, 2 of my specific price action predictions that I made in that video also came true within the first few days of the month. So make sure you stay tuned for all the juicy details and sweet gains that'll leave you salivating. I'll be posting my stock picks for August later this weekend, so make sure that you subscribe and tap that notification bell so that you don't miss them. Alright, let's go ahead and dive in with a general market recap. The first half of the month was marked by surges in big tech stocks as they continued their bullish runs from June. In the second half of July, the market entered the heart of earnings season, and the overall market pulled back slightly in caution and continued to trade sideways, as some companies fell short of expectations, while others like Apple and Amazon posted massive earnings beats. This is really where we see the winners continue to get separated from the losers in these incredibly unique economic circumstances. Banks, airlines, and cruise line stocks all continue to struggle in this pandemic economy, while restaurants, tech, and consumer staples continue to show amazing strength. The impressive earnings beats yesterday of the tech juggernauts Apple, Amazon, Google, and Facebook helped buoy the indices in an otherwise weak market. After it was all said and done, the S&P 500 posted a solid gain of 4.98% for the month, while the Dow gained 2.69%, the Russel 2000 small cap index gained 3.72%, and the tech-heavy Nasdaq continued to outperform with a gain of 5.81%. With that in mind, let's head on over to the charts and look at how our individual stock picks performed over the last month. First off, we had Alibaba, ticker symbol BABA. I picked this stock because, like Amazon, it is positioned to thrive despite the pandemic as a multifaceted technology and e-commerce company, and for its much favorable valuation compared to the big American tech companies. If you remember my July video, I said this: these scandals seem to be quieting down and the stock is getting ready to test this key level of resistance at the $225 level. If we can see a breakout above $225, this stock could easily take out its all-time high, just $6 higher. And sure enough, in the first few days of July, the stock broke out above this level of resistance and notched multiple new all-time highs. The price action at these new levels also beautifully set up a new level of support around the $240 level that we can continue to use to trade along. By the end of the month, Alibaba posted a stunning 16.24% gain. You can say what you will about Alibaba being a Chinese company, but the analysts seem to absolutely love this stock and think it has a lot more room to grow. So this stock is definitely staying on my watch list, and I'll be watching it closely as it reports earnings in August to see if we can notch a few more new all-time highs. If Amazon's blowout earnings beat just a couple of days ago is any indication, this 16% gain in July might only be the beginning of a much larger bull run. My second pick was Skyworks Solutions, ticker symbol SWKS. Skyworks makes many of the small components that go into all sorts of electronic devices. In your own home right now, you may even have several devices that contain Skyworks products without even knowing it, including your iPhone. This pick was primarily about the 5G trade, but also because I suspected that this company would rally sympathetically with the constant stream of positive news that we seem to be getting from the major tech companies that continue to thrive despite the pandemic. And rally it did, with an impressive 15.68% gain. This stock will never be as exciting as the AMDs or Teslas of the world, but it is still a rock-solid company that is currently indispensable to many big tech companies. My third pick was NVDA, another semiconductor stock with notable exposure to 5G as well as gaming, which continues to show strength with most public entertainment options completely canceled. This one was the second of my price action predictions to come true, so let's take a listen. When we take a look at the charts, NVIDIA has enjoyed a nice run up and is starting to get a relatively high PE ratio of 69 and a low dividend yield of 0.17%. But in this tech-friendly market, I could easily see NVIDIA making it over $400 per share in the next month or two. Sure enough, in the second week of July, NVIDIA pole vaulted over the $400 threshold to new all-time highs. After the breakout, the stock pulled back slightly and consolidated before rallying again to another all-time high before the close of the month, a very bullish sign. This last-minute rally leaves us sitting pretty with an admirable gain of 11.38%. The least volatile stock on this list by far was my fourth pick of the month, the consumer staples giant Costco, ticker symbol COST. Costco is a leader in the sector, and the first name people think of when they want to stock up on groceries or other household items to stay home for long periods of time. During the whole month of June, Costco remained range-bound, so in my July video, I described a very specific strategy to swing trade this stock with put spreads, using this old level of support around $300. In the end, I was only able to use that strategy once, because in the first few days of the month, Costco broke out to the upside, leaving my well-established level of support in the dust. I did achieve my target gain with that one trade, but if you had just bought and held the stock the old-fashioned way, you would still have beaten the S&P 500 with a respectable gain of 6.82% for the month of July. Last, but certainly not least, we have my favorite restaurant stock, Brinker International, ticker symbol EAT. I've been pounding the table on this stock ever since it dipped all the way down to $8 per share back in March when the rest of the market bottomed. Many people think that all of the leisure, travel, cruise line, and restaurant companies are dead on arrival. But while airlines, cruise lines, and hotels have massive overhead costs and limited options, restaurants have the unique capacity to evolve and survive, dare I say even thrive during this pandemic. I mean, just look at the stocks for major chains like Chipotle, Wendy's, or Starbucks. From the way their stocks are trading, you would never guess that most of their dining facilities remain closed entirely. Brinker International is a great story because going into this pandemic, they were not considered a fast food company, but they already had extensive takeout infrastructure in place with their Chili's and Maggiano's chains, and continued to innovate and evolve by launching a brand new takeout-only restaurant called Just Wings with over 1,000 distribution centers. I tried the new restaurant twice this month and was pleased with the results. The prices are fair and you get a ton of bang for your buck. I mean, who doesn't want an extra heaping pile of curly fries with every 8 additional wings? It'll be interesting to see what the company has to say in their next earnings report. But just this month alone, the stock is up an astounding 16.31% and has almost another 50% to go until it's anywhere close to its former trading range. This right here, ladies and gentlemen, is how you successfully beat the indices. With an average July gain of 13.29%, this watchlist more than doubled the gains of even the highest performing of the major indices. If that isn't enough of a gain to get you to smash that like button, I don't know what is. I hope that the performance of this list helps to show you that simply buying the S&P 500 is not the best way to invest in this market. There are clear winners and losers in this pandemic, and buying index funds forces you to own both the good and the bad. Now, I'm not trying to claim to be some sort of oracle or genius statistician. I made all of these picks with just a little critical thinking about the current market conditions, some simple technical analysis using support and resistance, and data on the individual stocks like PE ratios that anyone can find with a quick Google search or a glance at their trading platform. We somehow managed to nail 5 out of 5 this month, but sometimes you can have the right market predictions, but just with the wrong timing. Back in June, I picked Moderna and Abbott Laboratories, which both slightly underperformed that month. But about halfway through July, both of these stocks made notable moves to the upside, gaining 20% and 10% respectively. Now, timing is difficult and you won't always be holding the big winners when they make their moves. I managed to miss out on the big AMD move the last few days. But you don't have to predict every wild market move to beat the market. But focusing your investing on quality companies that are positioned to perform well despite the ongoing pandemic is the first step to setting yourself up to beat this market. Now remember, I'm not a financial advisor and I'm not trying to tell you which stocks to buy and sell. My main hope is that this video will encourage you to get out there and do some of your own market analysis, to get your own taste of these sweet gains. My stock picks for the month of August will be coming out later this weekend, so make sure that you subscribe to my channel and hit the notification bell so that you don't miss out. Until next time, keep calm, stay healthy, and happy trading.